Brian Quinn's here with Business Now on the programme. We're going to start with a pro-Palestinian protest movement that has been roiling US college campuses. Talked about it a lot last week, but it's carrying on, isn't it, Brian? You've been taking a closer look at the demands, particularly on a financial level.
So, Stuart, key to those demands, of course, is this idea of divestment, selling off financial assets tied to Israel's occupation of Palestinian territories and the war in Gaza. Columbia University, the epicenter of the current protest movement, has a $13.6 billion endowment fund. That includes shares in Caterpillar, which provides armored bulldozers the Israeli military uses to demolish Palestinian homes, including the one that ran over and killed American peace activist Rachel Corrie in 2003. Also included in that portfolio is Airbnb, which allows listings in Israeli settlements in the occupied West Bank, settlements that are illegal under international law. Microsoft's Azure provides the cloud computing service that Israel uses to identify, track, and issue work permits for Palestinians, along with software services for the Israeli police and prison services. Amazon and Google, meanwhile, share a $1.2 billion contract called Project Nimbus to provide cloud computing services to the Israeli military and government. Hundreds of those two companies' employees published a letter saying the technology will make Israel's quote, systematic discrimination and displacement of Palestinians even crueler and deadlier. Student organizers want Columbia to sell off those shares. Take a listen here.
1. Divest all finances, including the endowment, from corporations that profit from Israeli apartheid, genocide, and occupation in Palestine. 2. Complete transparency for all of Columbia's financial investments.
At the heart of this action, at the heart of this encampment, is the wish for a complete divestment and boycott of institutions that are complicit in Israel's genocide.
And student protesters at other universities like Cornell, which has a $10 billion endowment, are calling on their administrations to divest from weapons manufacturers. Cornell students have identified 10 defense firms involved in supplying the Israeli military with material used in the war effort that has now killed more than 34,000 Palestinians, including nearly 15,000 children in Gaza over the past 6 months.
So, Brian, are there precedents then for these kind of demands, and are they likely to have any effect?
So the main precedent for divestment campaigns, of course, is the case of apartheid South Africa, whose brutal oppression of black citizens, many protesters say, bears parallels to Israel's treatment of Palestinians. In the 1980s, Columbia bowed to student demands when it sold off $39 million in stocks of companies doing business in South Africa. Eventually, 150 other schools did likewise. Columbia students have also had recent success in getting the endowment to divest from fossil fuel companies and private prison firms. If they are successful this time, the impact will likely be largely symbolic. The firms targeted represent less than 0.1% of Columbia's endowment, and selling off those shares, of course, just means that someone else buys them. Students, though, are hoping to build momentum and get larger swaths of American society to pull support from Israel's war in Gaza and its treatment of Palestinians overall, like this student here. Take a listen.
They could end this today by meeting the students' demands. They're not unreasonable demands. They've met these demands before with regards to South African apartheid divestment, with regard to private prison divestment, with regard to fossil fuel divestment or thermal coal divestment. And so I think that it's not a matter of if the university is going to divest, but rather when. And for them to continue to hold out in this way, it only hurts them.
Yeah, one student there. Now let's move on. Have a look at the day's trading action, Brian.
So Asian markets are mostly rising Monday as investors look ahead to the next meeting of the U.S. Federal Reserve later in the week. The Tokyo Exchange is closed for a holiday Monday, but the yen is trading. It hit a 34-year low against the dollar before bouncing back a bit. Many analysts expected the Bank of Japan to intervene in currency markets to prop up the yen at the bank's meeting last week, though. So far, no action from the BOJ. European indexes opening higher as well. Shares in struggling French IT firm Atos gaining amid an offer from the government to acquire its critical data security operations. The CAC 40 here in Paris up 0.33% at the open. British mining giant BHP is losing some ground as smaller rival Anglo-American rejects its takeover bid. Anglo-American is up around 2.5% at the open. London's FTSE 100 up 0.5%.
Finally, from Brian for Business, a surprise trip. This is to China by Elon Musk, would you believe?
Yeah, indeed. The Tesla CEO landed in Beijing over the weekend for an unannounced visit. His goal there to convince the Chinese government to allow Tesla's full self-driving service in the country. It looks like that trip was not in vain. Musk leaving Beijing Monday with key data security clearance approved by regulators, paving the way for full self-driving's rollout. That comes as Tesla is facing increasing competition from domestic Chinese electric vehicle producers. Andrew Hillier reports.
It's the kind of welcome normally given to a visiting head of state. And after days of tough talk from US Secretary of State Antony Blinken, Elon Musk's own visit to China struck a different tone.
It's good to see electric vehicles making progress in China. All cars will be electric in the future.
He flew into Beijing and sat down with one of the most powerful men in Chinese politics, Premier Li Qiang, a confidant of President Xi Jinping. The billionaire's visit was unannounced, but it won't come as a surprise to those familiar with Tesla's flagging fortunes. Musk is hoping to secure approval from Chinese regulators for Tesla's autonomous driving system to boost its falling revenues. The car maker is grappling with a fall in global demand for electric cars, and it faces rising competition here in its second biggest market from cheaper Chinese rivals such as BYD, which rolled out their wares at Beijing's auto show. Back in 2019, Tesla partially shifted production of its cars to China by opening the Shanghai Gigafactory. The move helped jumpstart China's domestic production of electric vehicles, feeding competition from other car makers that's eating into Tesla's sales. More than a week ago, the company announced sweeping price cuts to shore up its falling share price. Tesla shares have fallen by more than 40% since January.
So that regulatory approval of, well, regulatory progress for full self-driving. Some rare good news for Tesla in China lately.
Brian, thanks very much. Brian Quinn with the Business for us.